Hello, this is Accounting Vodcast in order to show you how to calculate depreciation using the straight line wizard and also the diminishing balance wizard in Excel. Now within the exam itself you're going to have to create what is called an asset register. Now all of this information is in your student workbook, but basically what is entailed in the asset register, firstly what the name of the asset is, what number it actually is, who's it come from, and where it's actually located. Over on this side over here you'll put the method of depreciation, so it's either going to be straight line or diminishing balance. Okay, with diminishing balance you will actually have a rate there. Estimated life will actually be given in the question on how many years you are going the asset expected to be used for, and residual value. Now residual value is basically the cost or the amount that you're going to receive when you either trade it in or actually dispose of the actual vehicle itself. Alright, now the original cost over here is the cost of the actual asset plus any additional costs, okay, which are basically any capital expenditure. They include things like insurance, customs duty and getting the asset to your actual location, and also any other major repairs that you may actually have for the actual asset itself. Now the cost of the actual asset is GST exclusive. So remember that you have to take the GST price off, the GST actually off it. Now what is actually entailed is this is all the information that's going to come to be used for your journals. So your cost will actually be your 50,000, so you're going to use cell referencing here. Alright. Now the other things here are basically used for you to actually record how much the depreciation is. Now the straight line is the easiest one in actually to use, and that basically entails you getting the original cost minus the residual value time and divided by the number of years to give you the same amount every year. Now within the actual exam itself you may actually have an asset which is acquired partway through the year. So for example, we've got here an asset that's been acquired as at the 1st of September. So therefore you need to prorata that in order to calculate the depreciation leading up to the 30th of June of the following year. Now in Excel, to get a formula, press equals, and then you can actually drop this down and you can go to more functions. Now you can actually type here the ones which you actually need. Straight line here is the one which we are going to use. So in order to get the straight line in Excel, we are going to calculate SLN and then press go. Okay, and you can see here a little wizard that will come up where you have to input the cost, the salvage life, and also the life of the asset. Now the salvage life is basically the residual value, so we are going to go OK. Alright, and then it's just a matter of clicking on the required cells. So the cost is this one over here, the salvage is this one over here, and the life is this one over here. Okay, so the formula is going to bring back $7,000 worth of depreciation. Now the trick here with this one is that this $7,000 is for the full 12 months. Now because we bought it in September, we need to prorata that. So within this actual formula we're going to times it and times it by the amount of months that we actually own it for. So you include September, October, November, December, January, February, March, April, May, June. So that's 10 months and then divided by 12. Okay, so that comes to $5,883. We are going to put whole dollars here. The accumulation depreciation equals the previous years plus your depreciation for the current year. And your net value basically is your purchase price minus your accumulated depreciation. Now this figure becomes very important when you actually do the extract of statement of financial position. and then it's just a matter of dragging down your actual formula itself. So we are going to use absolute cell referencing. So that entails basically allowing you to drag down the formula and using the same cells. So the same cells that we're going to use are for the original cost, for the salvage, and also for the actual life of the asset. So we can actually drag that down now, and then get rid of the 10 divided by 12 because we own it for the full 12 months. Okay, drag down your formula for accumulated depreciation, and then drag down your formula for net value. Okay, now the only thing you need to fix up here is basically the cell referencing. So we are going to put a cell reference here in the C8, and then we are going to drag that down. Okay, so that is basically how you do the straight line depreciation. The next thing we are going to do is we are going to do a diminishing balance. Now, the difference between diminishing balance and a straight line is that the straight line basically says that you have the same depreciation for the same period of time, for any given period of time. So you can see here we've got 7,000, and then for the next year that would be the same amount. Now the diminishing balance basically takes into account that the asset will be valued less in the future years. So if you take a Commodore, for example, when you drive it out of the dealership, it's obviously going to lose its value by 50% already. So if it's a $50,000 Commodore, which I don't think actually exists out there, automatically will be $25,000 as you drive out of the lot, and then the next year it'll be worth less again, probably around the 5,000 mark. Obviously things that improve the life of the Commodore are losing hubcaps and fuel caps and things like that. So we are going to do this one now. We are going to use the same different information, and this information will be as per your student booklet. Okay, so we are going to use here a computer network. Okay, first one, don't worry about supplier. Method of depreciation is diminishing balance. The rate is going to be 24%. Okay, with an estimated life of 5 years and a estimated residual value of $50,000. Original cost without GST of $200,000. Okay, so we're going to put the purchase price here. Always remember to use cell referencing. Okay, and then we are going to depreciate it for that year. Okay, so we're going to put depreciation expense here. Okay, same principle applies when you're actually getting a formula for diminishing value. Okay, so equals, click this down, and then we're going to go to more functions, and diminishing value is called DB in Excel, and it is called diminishing balance. So you got your cost, your salvage life, your period, and your actual months. Now the period basically relates to what period in time you actually owned it for. So is it the first year that you actually owned it? So we're going to put 1, alright, and the month reflects how many months you actually owned it for. Okay, so we are going to, using the wizard again, click on the cost, click on the salvage, or the residual value, click on the life, okay, and then click on the period. Now since this is the first year that we actually own it, we are going to go number 1, and we actually own it for the full 12 months. So you can see on my date here, it's the 1st of July to 30th of June 2012, so that's 12 months. Okay, and then we're going to click OK. Now again, you're going to cell reference, absolute cell reference these. In order for you to actually drag it down. And then it's just a matter of changing the year. So we now own it for 2 years. So we're going to put 2 instead of 1. And then over here we're going to put 3 years instead of 2. And the same principles apply for your accumulated depreciation. So it is basically equals your opening accumulated depreciation plus whatever the depreciation was for that year. Okay, and then you can actually drag that down. Now those things basically represent the numbers too big for the actual column, so just adjust your column. And then your net value, or your reducing balance, equals that minus the accumulated depreciation, and then we are going to put absolute cell referencing over that. Adjust your column width, drag that down, and that is basically how you calculate straight line and also diminishing balance. Now the next lesson that we'll actually do on your vodcast is incorporating your disposal and how to actually set up your ledgers and your journals as well.